Joining me with today is Nik Dvornak, Portfolio Manager from Platinum Asset Management. Welcome, Nik.
Thank you, Mark. Thanks for having me.
North Korea, political diplomatic relations with America, and it would seem every other country, including Australia, is maybe not at all-time lows, but we're getting there. How does a professional investor, how does Platinum Asset Management think about the threat or the perceived threat from North Korea and the leadership there?
Look, that's a good question, and it's a tough one. We don't pretend to know anything about North Korea that other people don't. We've got no special insight. But we do have many investments in South Korea, and South Korea is obviously threatened by North Korea. So we can identify many good investment opportunities at a company level, and we always come from the bottom up. So at a company level, there's good opportunities. South Korean stocks are generally cheap, so partly this political situation is priced in. Yeah. To manage that risk, we think very carefully about sizing of those investments. As the opportunity improves, you might increase the size, but as prices increase, you'll reduce the size because you're always mindful of that risk. Currently, the International Fund has about 8% in South Korea. The other way we think about it is about 2% of that 8 is domestic South Korean companies. Others like Hyundai Motors or LG Chemical are predominantly exporters. I mean, they're global businesses that have operations all over the world. So they're not, I mean, they're still impacted, and the stocks are listed in South Korea, but the operations are much more broadly diversified. Yeah. So we look at price we pay and how much that captures risk. We think about investment sizing. We think about where the operations of the business we're buying are. And just to give you some context, I mean, you know, if you think back 30 years, I mean, there was an Iron Curtain dividing Europe with Soviet tanks on one side and NATO forces on the other. There was nuclear weapons pointed at both sides. It didn't mean you necessarily didn't want to invest in Europe at that time, although the damage that would have been done is probably far greater than what North Korea can inflict on its neighbours. You know, we also invest in India, and unlike Korea, which is a very cheap market, India is very expensive, and they are conducting cross-border raids into Pakistan. They both have nuclear weapons. So, you know, you have to remember, Korea is not unique in being in this position.
So essentially, I mean, one of the criticisms against economists is that they've been able to pick 10 of the last 2 recessions. And essentially, do you think it's a fair statement to say that you can overplay these things when investing money? I think that's how do you react to that?
Yes, but the minute you say that will be the time you're wrong. But it's true. Look, we've seen it in Korea for many years. People worry about the North, and stocks are cheap, and as a result, there have been fantastic opportunities and to make money, and we've taken advantage of that many times. Thailand is another good example where, you know, you have this concern around coups, dictatorship, the monarchy, and as a consequence, where we have these coups, you get these great opportunities. It by and large hasn't paid to worry about politics. India is another example. Europe during the Cold War is another one. But that's not to say it never happens. I mean, you know, if you had ignored geopolitical risks and were investing in Ukraine, you would have probably regretted it.
Yes. But the other thing that I'm taking